All right, cool. Well, we won't wait any longer. It's about 2:06. Thank you, everybody, for joining us here. A big thanks to Josh Shields for actually taking the time out of his day to do this for us. There's so much information out there, as I'm sure we've all been getting in our emails the last week and a half. So what Josh is going to do is he's going to take some questions, but he also has kind of a presentation that he's just going to go through with us about the CARES Act and some of the benefits that we can all apply for. We're going to record the call so we can distribute this out as well for maybe people that you think of that weren't able to join us on here. And Scott Wallers, the Vice President of San Marco Merchants Association, actually was talking to Scott and presented this as a really good opportunity for us to share with the community, and it has it's gotten a lot of feedback. So we're really, really appreciative of you, Josh, doing this for us. And without any further ado, we'll just let you get into it, and hopefully we can all learn.
Why don't you guys put your bathing suits on while you're sitting there?
Oh, how do we do it?
Hey, you guys.
I think the host.
Hey, can you guys tell who's doing the recording?
No.
I think it was Josh. I mean, his says next to his, there's a little cloud that he's recording it.
Oh.
There's a setting that starts recording automatically, so I'm pretty sure it'll be available online on Josh's thing. But
because mine says recording, it's got a little red button, and I just want to make sure I'm not the one that's recording, because if I am, I'm not doing it intentionally, and I would not.
Art says recording too.
We didn't try to.
Okay.
I'm pretty sure it's Josh's computer, because if you go to the participants list, it says his is recording. So.
All right. Well, there's a lot of information, so I'm going to get going because I do want to save time for questions. Sounds like somebody's got some kids with them from working at home. So if everyone doesn't mind maybe muting themselves.
I can't do it when I'm buckled up.
Josh, you have the capability of doing that also. If you go to participants, you can just mute everybody.
All right.
Oh, you have to
Figure this out.
It's better to do it that way. There you go.
All right. Okay. So first of all, what I wanted to do was I want to thank Joe and I want to thank Scott for reaching out to me. A little bit about our firm. We have 2 offices in Jacksonville and Ocala, Florida. We provide traditional tax and accounting services to small businesses and individuals. In addition, we have a forensic and valuation services practice where we provide expert witness, litigation support, forensic accounting, and business valuation services. I primarily focus on that. So I do a lot of work with analyzing businesses. So when we started to understand that the pandemic was coming, and really about 3-4 weeks ago, I think is when everyone saw the urgency of it, I was already speaking with other businesses about what's going on and what they can start doing. The fact of the matter is, what this is doing is the pandemic is not only is it forcing some businesses to shut down, but it is also stressing on some businesses. And what I mean by stressing is it is causing them to have challenging times with their balance sheets. Most small businesses that you see do not have what I would call a strong enough balance sheet to survive 30 or even 60 days of not receiving anything on their receivables and while meeting their payables. So if anything comes out of this, I hope for those businesses that do get past this, and I'm hopeful that we all will, and we'll go into the stimulus package on why I think it will help us. You need to have a strong balance sheet. You need to have not just capital to pay 45 days of outstanding payables, but what you also need to be able to do is make sure that you can meet operating expenses. Kind of a rule of thumb that I go by is, do I have enough cash to last 60 days? Certain businesses, specifically those in hospitality, restaurants, are already operating on slim margins. So those are the businesses that I have a lot of concern about, right? The good news is the government has those same concerns, and they have identified a way to really pump liquidity into the market. And what we're seeing with the emergency disaster loan program from the SBA, and then more importantly from the payroll protection program, and that's the program that's offering the loan forgiveness, is a way for businesses to keep the rent paid, utilities paid, and also keep payroll going, right? Now, it's only going to be for about 2.5 months. The one thing that I am talking about to some of my businesses, for example, my restaurant clients, is how has this changed? This pandemic has changed our economy. I think that certain businesses, not just the ones that are capitalized, but business owners that are able to understand how their business model has changed and what they can do to come out of this, are going to be the ones that survive this. I think that there are, unfortunately, going to be casualties of war, for lack of a better term. So what I'm working with the AICPA is, businesses will come out of this. Those businesses that come out of this are also going to see opportunities in acquiring other businesses and assets. But that's really a topic for something else. On the call with me today is 2 people from my office. Christina Ives is a principal with over 30 years experience in tax and accounting. And Stephanie Swetland is a senior associate with our firm. And they, along with me, have been really focused. We read the bill. When the bill came out, I'm not in the trust business, is something that I learned. We actually spent last weekend reading the bill because we wanted to understand these varying components. New information is coming out every day. I've been on the phone with several banks talking about the application process and how that's going to work. What we're seeing right now, just to kind of let everyone know, is best case scenario, applications will start processing tomorrow. Best case scenario is probably 10 business days before the funds are released by the bank. I think that businesses need to realize that that's a best case scenario. I think a more realistic scenario is going to be 30 days before you see that actual liquidity. And that may extend out longer, because the way that we're understanding the process is that it's going to come kind of like who's ever first in line. They go through, they submit their application. They need to have the required documentation in place. Then it goes to the SBA. Just to give you guys somewhat of an example of how big this program is, a regional bank here in Jacksonville, their SBA department, and this is just one, already has 5,000 applicants. Okay, so I think the most important thing I can tell you is call your institution. Do not talk to a branch manager. Talk to your SBA lender. Most institutions have a specific department or individual that is responsible for the SBA program. If they push you to go to the website, say, no, I want to talk to somebody. That would be my advice to you. But with that said, Stephanie, Christina, are you both there and able to talk?
We are here.
We are here.
Great. So let's just get in and kind of briefly go through the tax parts of it, because in addition to just the liquidity that is coming out there for small businesses with the SBA loan and the forgivable loan programs, there's other events that are happening excuse me, that maybe you won't see right away, but you do have an advantage of, for some of those companies that are strong and properly capitalized, to take advantage of in the coming tax years. So I'm going to hand it over to these two professionals to kind of talk and walk through this. Stephanie, Christina, I will do my best not to interject, I promise. And I will just, you tell me how to drive the slides.
Stephanie, you want to go ahead and you can talk about the individuals, and then I can talk about the payroll.
Okay, so we will start with individuals and the recovery rebates, which is what everyone has heard most about. That is, the CARES Act provided a provision that allows for the IRS to issue rebate checks, they're called recovery rebates, to all individuals that a single individual's AGI is less than $75,000, or married filing joint would be $150,000, or for head of household is $112,500, and you would receive a $1,200 rebate per adult and $500 per child. There's nothing that the individual taxpayers need to do now to take advantage of this. The bigger piece to me for individuals is the retirement provisions that were included. If you have an IRA or 401k account, you can, there's been an exemption added for the COVID-19 pandemic that allows you to take up to $100,000 loan or distribution, and they're providing a 3-year repayment period for loans, or you can spread out, if you choose to take a distribution, you can spread the income inclusion out over 3 years instead of picking it all up in 1 year. And also for individuals, they're including an above the line deduction for charitable contributions. The maximum amount is $300, but it's above the line and you don't have to itemize to be eligible to take that.
So if I could, I am just going to interject real quick. I think this is important for those of us that are doing well right now. There are certain institutions that are near and dear to our hearts here in our city that are, you know, charities or 501c3s. What this is doing is allowing us to open up our checkbooks. And in prior years, we didn't really get the benefit of this because the standard deduction increased. Now you're going to be able to take that above the line and it's going to have a direct impact to you. So that $300 check is almost, and Christina, keep me straight here, that's almost a dollar for dollar tax implication, right?
Right.
Give or take a little bit. But
Right.
I think it's important for us to know that there's a lot of institutions that rely on donor funds. And I think that's a real benefit there for those of us who aren't struggling, to realize that there's an opportunity for you to be able to help.
You can move to the next slide, please.
Of course.
And if you currently have a tax debt obligation or are in process of an audit or communications with the revenue officer, et cetera, the IRS is suspending collection activities. They are continuing to work on the back end of open audits, but they're not pursuing any new audits at this time. If you are currently in an installment agreement with them that's enrolled in direct debit, you can log into your account and suspend your payments until July 15th. They will not default you on your agreement, and they also will not charge you any interest or penalties on those payments. And that also applies to accepted offers in compromise. And then, Christina, do you want to talk about unemployment assistance?
Sure. So also I want to make out one point that, you know, everybody hopefully is aware that the majority of the returns have been extended through July 15th. This would include corporate, personal, anything that was a calendar year end. And they have just recently also extended the gift tax and returns and some 990s. They're not really quite clear on which ones yet. So hopefully they're really pushing to get the rest of those extended with that relief for individuals and corporations. But regarding the pandemic, unemployment assistance package. So the CARES Act is providing up to 39 weeks of combined federal and state unemployment assistance. The biggest thing with this, it applies to individuals who have had payroll, but it also applies to independent contractors and or self-employed persons, which is unheard of. They've never allowed that to happen before. So anybody who is a partner in a partnership is eligible for unemployment should they find themselves not able to work anymore. And independent contractors that work for a lot of companies as 1099 employee or 1099 subcontractors are eligible as well, and that's never heard of. In addition, they have increased the unemployment rates to an additional $600 to be federally funded payment for up to 4 months for if you already are collecting state unemployment insurance. So 2 things. The unemployment for independent contractors, huge, huge, huge. The other thing is that the unemployment has been extended. And last thing, just remember that unemployment income is subject to federal taxes. So you'll get the income, but you will pay income tax on it. In addition, there's some paid leave and this applies to employers to allow their employees to take time off up to 80 hours of paid sick leave and or care for children. So there's a couple different rules in here. If you take leave because you're sick or you're not able to work because you're quarantined and you may have symptoms, you have 80 hours of paid leave at 100% if the employee is specifically infected or affected. However, if they are taking time off and they can't telework because there's no childcare and or schools, you should pay them 2/3 pay. And with that, you'll get some payroll tax credits for the monies that you have paid. This was created specifically for small businesses who didn't have in place some kind of PTO for their families, and this allows those families to stay employed with a paycheck rather than have to collect unpaid time, and gives the employer benefits to paying those employees. Next slide, Josh, please. So now we're going to talk about the business provisions. So there's a lot of different rules that came out of this, not just for the CARES Act specifically in regards to the pandemic, but for future tax returns that will be filed. These are just a few of the largest ones. The net operating loss carryover for 2019 and 2020 will not be subject to the 80% taxable income limitation, and no NOLs from 2018, 2019, or 2020 can be carried back 5 years. The interest expense limitation, which is huge for businesses, is no longer subject to 30%. It is now increased to 50%. So if your debt is over 50%, you can now take your interest expense. The AMT credits for corporate AMT are refundable 100% for the years 2018 and 2019. We don't see this a lot in the small business section, but you do see it in really large corporations. Payroll tax payments. The CARES Act permits employers to defer payment of the employer's share of the Social Security, that's the 6.2%, paid over the following 2 years, with 50% of the amount required to be paid by December 31st, 2021, and the other half by December 31st, 2022. This is huge to small businesses because this is a big expense for them. This is 6.2% that they pay on everybody's salary. So the fact that they're able to defer some of this is a big deal. You're still responsible for the FICA tax, which is the 1.45%. The employee retention credit, this goes back to saying that if you are giving your employees, actually, no, I lied. That's the paid leave. The CARES Act allows for qualified business owners who would be eligible for an employee retention credit, giving eligible employees a tax credit for keeping American workers employed. Employers may be eligible for refundable credit up to 50% of the qualified wages, up to $10,000 per employee. The CARES Act retention credit cannot be combined with the SBA loans. That's sort of a big deal because they don't want you double dipping. So it's either or. But
that's a huge deal from a compliance standpoint. And we're gonna, like I said, the tail end of this is about those programs. But the reason we're going through these little fine details is we want to make individuals and business owners aware of the domino effect that could occur, right? So there's certain things in here, right, that you're going to want to sit down, and before you take loan money or you take sort of grant money, what we're telling our clients is your budget is gone. Forget your budget. That's done. What you need to be looking at now is really a 60, 90-day forecast, in some cases a 30-day forecast, and managing your pipeline of customers, clients, as well as suppliers. But then also, how can your margins are going to be compressed this year, your operating margins and your net margins. Now, what Christina and Stephanie are pointing out is here's going to be some relief for you in subsequent periods. So while you're feeling some pain now in your cash flow, the IRS and the Treasury has put together some relief in addition to the liquidity program. But be very mindful of the steps you take to make sure you're not in compliance next year. Just because they've laxed off on the IRS agents this year, I have no reason to believe that they will do that in subsequent years. Stephanie brought up to our attentions that the IRS now just put out a big hiring kind of banner on they need these types of agents. So our government is smarter than we think. Sorry, Christina.
So the other half of that individual employee paid leave is the employer side. So when the employer pays those persons to take the leave, the 80 hours that we just talked about, which is 10 days, they're eligible for a discount dollar for dollar of their wages off of their payroll tax, which is just a really big thing. So if you pay somebody $1,000 in their wages, you're eligible for a $1,000 payroll tax credit. They're in the process of redoing the forms, so we're not really sure what those forms are going to look like and how that's going to be reported and when. But there are limitations, as with most anything else, about the maximum per day. So, and again, goes back to tracking if the employee is taking time off for their family because they don't have childcare is one of the things, or to take care of a sick one at home, or if they themselves are directly affected. Then that matters of how much you're required to pay them as the employer.
Okay.
Stephanie, I'm going to let you talk, or Josh.
Well, for a little bit, right? Like, because there's so many details, and people that have heard me speak before, you can get lost in the details. In this case, they're extremely important. Stephanie has really paid mindful attention to this, but we're learning every day. For example, those of you that know me know that, a while ago, I wasn't Schultz CPA, I was another name. Well, last year I paid my EIN under that. So when we were putting together our package, we had questions about, hey, we don't have that same EIN and all of those types of things. I'm going to say this to everyone. The SBA, they're learning on the fly too, as well. The government, they want to get liquidity out there, but there's going to be some snags. Personally, I feel that, and I've been kept in loop with that because being an AICPA firm, we get special attention because the AICPA lobbies, for lack of a better term, to make sure that the CPAs are involved in this, not just from a tax standpoint, but then also the financial impact that it has for our clients and ourselves. There are certain things that Stephanie's going to bring to your protection, but there's really two programs right now that, as a business owner, you need to be aware of. The main one that we're talking to everyone about is what we're calling Triple P, which is Paycheck Protection Program. And at a very high level, you're going to take the average of your monthly payroll over the last 12-month period, okay? Think about that, the last 12 months, not all of 2019. And based upon that, we're going to multiply that by 2.5%. In that is going to be included certain local taxes. It's going to include benefits, insurance premiums, all of that stuff. So what the government is doing is saying, look, I'm going to give, let's say it's 50,000 just to have a round number. I'm going to give you $125,000. If you use this money for an 8-week period, which is the covered period is what the bill calls it, for payroll, which includes, by the way, that's payroll up to 100,000. So if you have employees that are making over 100,000, if you're an S Corp owner and you're paying yourself more than that, there's going to be a reduction for that. But you're going to be able to pay the payroll, including the benefits and all those other things. If you use that money for payroll, rent, utilities, as well as mortgage interest, it will be forgivable. The AICPA is working with the Small Business Administration as well as with the Treasury right now, because there's going to be a authorization process after this 8-week period. And what the AICPA, and I've talked to some banks here in town, the banks don't want to do this. The banks don't want to be the ones that have to take the documentation and basically do a audit, for lack of a better term, to validate what the money was used for from an expense standpoint, and somebody's going to have to sign that off. The AICPA is trying to position that CPAs and CPA firms will be the ones to do that, because that's what's going to have to be done for this money to be forgivable, okay? So the government is going to give you 2.5 times your payroll, and you have to use that however you want to do it. If you use it for the 4 items I talked about, and you have documentation to support that, it's going to be a forgiven loan. No interest, nothing. Another thing, and I don't know if we talk about this, is for those individuals that have SBA notes right now, SBA 7A notes, and a lot of times that's used when you're purchasing a business, the government is going to pick up your tab in principal and interest for the next 6 months. It's not a deferral. If you owe 100,000 right now, they're going to pay your principal and interest for 6 months, and they're going to knock that balance down for you. So those to me are the 2 biggest programs that right now, if you're involved with. The other one is the disaster relief that I'm going to let Stephanie talk about, because it all merges into it. But I really want to hit on these things. And if you're interested in this program, as soon as we're off this call or while you're on there right now, contact your bank immediately. Go ahead, Stephanie.
Okay, so the economic injury and disaster loans are loans that are up to $2 million. The cap interest on them is 4%, and they can be used in conjunction with the Paycheck Protection Program. And if you were an early starter, or you suffered adverse consequences earlier than some other people, or sooner than they were able to get this legislation out, and you took an EIDL to cover payroll, they will roll that amount in to your Paycheck Protection Program and then make it also eligible for forgiveness. The EIDLs are a little different in that they can cover your general operating expenses. So if you have other business debts, you have business vehicles or other leased equipment, things like that, an EIDL loan can cover those costs and can also cover the principal of the mortgage, whereas the Paycheck Protection Program will only cover the interest of the mortgage. So it is good to be aware of those. And also another thing that I don't believe is in this presentation, but that is a good opportunity for maybe a smaller business that maybe doesn't really fit into either of those categories for the SBA loans. The Florida Department of Economic Opportunity is offering a $50,000 loan at 0% interest for 12 months. And I think that's also a good option to be explored by small businesses. And we also make sure that we tell all of our clients what works for one business or what is right for one business may not necessarily be the right option for the next business. It's all based on an individual. Where does your business's balance sheet stand? How is your operations going to be affected by this? So we're thinking about all of those moving pieces while we're evaluating options.
One thing I want to make businesses aware of is why I like the payroll protection program is it's free money if you do it right. But as I've said before, certain businesses need to be aware that that if you take on some of these other, you're taking on more debt, right? So I talk about thin margin businesses, even those with high margins. If you take on more debt, that's going to be less cash flow to you. The best thing about debt is the interest is, and Christina talked about it earlier, you can deduct that for tax purposes, but it will affect your cash flow.
I think you can move on to the next slide, Josh. I covered this.
Trying to do five things, sorry.
But you know, on the last slide, I did miss that the credit elsewhere test has been forgone with this. Usually with SBA loans, they make you ensure that you cannot obtain credit elsewhere. So pull on your open lines of credit or get an additional loan or something like that. And they've forgone that requirement with the Paycheck Protection Program and the EIDLs. And I thought that was pretty important.
Stephanie covered this. Go ahead, go to the next slide, please.
You guys are keeping me busy here with the chat questions.
So this is another thing to consider is the business interruption insurance. Business interruption insurance coverage varies across policies, and thus it's advised the policyholder closely review the policy to see if they qualify. There's a lot of different coverages out there, and we've listed a few types that are to be considered, and unfortunately a lot of them are not going to necessarily apply for the pandemic. However, there may be some other coverages that are available to you, and we highly recommend that once this is done, businesses consider some of these options to them that may have helped them in the future.
So let me hit on this. Business interruption insurance is something our firm deals with in economic damages and lost profit claims. Mainly it's been from natural disasters like a hurricane. So when I started hearing about the pandemic, being in the business that I'm at, I reached out to some of the law firms that I do this work with, and we started discussing this. There is different claims in insurance policies because of SARS that are excluding this. I know the government is trying to work with insureds right now, though, the insurers, to see if it can be included. So I think we're gonna see more information as the months come on. I think it's gonna be a tough one because if the fine print is excluding you from that, how are you gonna get past that? And most insurance companies, believe it or not, are not for-profit, but they are for-profit entities. So I feel that the business interruption insurance is going to be of an issue. Now, that being said, where we see potential litigation into the future, and I'm only going to touch on this briefly, is in certain covenant disputes and contract disputes, where maybe your business is a supplier to somebody, but business has been interrupted because of this pandemic, and you're not able to meet those contractual sides of it. All of us are expecting an uptick in litigation in this, but because we are in the eye of the storm right now, it is not something that is on everyone's plate. However, I still think it deserves attention because as a business owner, you know, like I said, strong business owners are going to get through this and be stronger, but you have to forecast what's in the future. What we're doing as a firm is we're not only looking at our next 30 days, we're looking at our next 90 and 100 days, at 120 days. We're also identifying what is changing for us from a business model. So for example, anyone who's ever met me before knows I go out to lunch, I'm always shaking hands. That's where we spend a lot of our marketing dollars. Well, obviously I'm not doing that right now. So I can take that as a way to save cash flow, or I can reinvest in, doing things on LinkedIn. So I want people to think about, how has my business been affected? What does it mean from what I'm not going to normally spend money on, and how do I utilize that money? Maybe you need to utilize that money for payroll right now, but also think about different ways that you can be creative and come out on top of that. Go ahead, Christina, sorry.
No, I think that the point to take away from the business and insurance is basically just to kind of keep an eye on your policies. And it's times like this, then we just reevaluate all the policies as a just in case, because you never think that these things are going to happen. And most policies aren't going to cover the flu or virus and things like that. So this isn't something to be foreseen, but maybe just take an extra look at your insurance policies. So this
Hold
is
on
going
one
back.
second. So there's some good questions coming in that I want to address just before we get to the rest of it. Someone asked, and how do I get the for the payroll tax? Is that something you have to elect for, or do you notify your payroll provider? Christina, I would go ahead.
There's not a lot of guidance. They're still working on that, but you're going to have to let your payroll tax provider know that you have paid these employees and why. So I've been struggling recommending to all of our clients to just go ahead and track what you're paying, and then we'll figure out how to report it after. Like I said, they're trying to redo the 941 forms, which are the quarterly payroll returns, and that's when you're going to report it, and basically it's going to be a refundable credit. So instead of you owing the money, they're going to owe you. Now, whether they're going to refund it right away or they're going to make it ride for a little bit, meaning apply it for a couple of quarters, saving you that cash, is unknown at this point. They're really just trying to redo the form to figure it out. But you should track it yourself so that you can let your payroll provider know, or your accountant, whoever's doing your payroll, to let them know what you've paid persons in those categories.
So I think the lesson out of this there for you is, if you haven't been doing a good job with your bookkeeping up until now, I would really put an emphasis on that and making sure that your record keeping and your books are in line, okay? If you're one of those business owners that uses the business account like a personal account, or vice versa, that's fine. We see it all the time, but make sure you have the documentation in place when you're submitting for reimbursement or whatever it is. Here's a good question for you, Stephanie. We have only been open for 6 months. Will we qualify for any of these programs?
So there are specific dates that you must have been in business prior to. Some of them are program specific. I believe the date is March 15th of 2019 is the effective in-service date that's applicable to the Paycheck Protection Program.
No, it's 2020 of this year. You can be in
I think
business.
I think there's a couple that are February. There's a couple that are March of last year.
Yes,
but then there are a couple
15th,
that are.
right. It's February 15th of 2020 of this year. If you were in business by that point in time, you're going to be eligible for the payroll protection program. But there are ones that you're talking about, Stephanie, that are applying. You're 100% correct.
And I think those are related specifically to the self-employed tax part of things, for the unemployment insurance and things like that for unemployed contract persons.
That brings up another good point. And Stephanie, I'd like you to talk about, because we've had some clients call in today, I think, saying, hey, I've already applied for one of these loans. Now I'm hearing about payroll protection. How does that work?
So again, there's not much guidance yet about this, but they did say that they will roll those. If you took one of those loans that are available to you from the SBA, so it would be an EIDL loan. Those are the only loans available to cover, say, payroll or other operating expenses. they will, if you took the EIDL loan to cover payroll expenses, they will roll that into the payroll protection program. But they haven't issued guidance on exactly how they're going to do that or what the process is going to be. The legislation stipulated that they had 15 days to issue the final regulations from the SBA.
And Friday will be 1 week, yeah. So Friday will be 5 days. So.
Here's a question, Christina. How do you determine FTE for CARES Act loan? Or what is the time frame to be used in calculating FTE?
So there is a, for the full-time equivalent, there is a formula that they're using, and I don't remember it off the top of my head. I'd have to look at it. But it basically allows for the same thing with restaurant owners and part-time employees. So it's an average of 2.5 months of their salary, based on a certain number of parameters. I can't remember the time period.
Great. I think one thing that we should talk about in detail is I go ahead and I calculate my payroll for the 12 months, right? But let's say that I lose an employee, not because of operations, but because of performance. How does that kick into it? And then let me ask you this. Let's say that I'm actually one of the lucky businesses that needs to increase my workforce right now.
So let's address the losing the employee first, right? So the way that you would be affected, regardless of how you lost the employee, if you received a paycheck protection loan, your forgivable amount is reduced by a certain number based on the reduction in salaries and wages, the reduction in employees. However, I believe that's why they are saying that they will include other expenses, rent, utilities, mortgage interest to make up for that, because those things are not included in the loan amount calculation. Only payroll is considered there and benefits, right? So, and then on the forgiveness side, they will forgive if you use the monies to pay rent, mortgage interest, or utilities. In the event that you lost an employee, you wouldn't need the money to cover the wages. You would then use it to cover these other expenses. In the event that your payroll increased, I don't know whether you would be able to redo your loan to add additional funds. I don't think that would be an option, considering the availability of funds and the way the processing is going there. I think the more logical solution to that would be to then, if you hadn't already taken an EIDL loan, to then take an EIDL loan to cover those additional operating expenses. One other thing to note, because I mentioned the Florida Department of Economic Opportunity loans, there are stipulations on duplication of all of these loans, and that goes across entities. So whether it's the SBA or the state of Florida, or if you don't live here in Florida and you live in Georgia, I'm sure that there's a provision for that. You can't apply for 2 loans for the same exact purpose.
Here's a good question, and I really appreciate everyone sending in the questions, because we're learning as you're learning, right? And our clients and colleagues and friends are sending us these questions, and it's good because we kick these up to our partners at banks and at the SBA. Do you have to go directly to a bank for these programs? I am looking at the SBA site, and it looks as though you can do it right on the site. I just had a friend complete it there, and he said it was very easy and user-friendly. So before I hand it off to my smarter halves here, what I want to say is that my understanding is you do need to go for the payroll protection program through an SBA-approved lender, because the government is funding the banks. Christina?
Agree. For the specific payroll protection program, you cannot apply on the SBA website. So the friend that applied did not apply for this payroll protection program. In addition, the application technically doesn't even open until tomorrow for small businesses. So what they may have applied for is one of the other programs that we mentioned. Those you can do directly on the SBA website.
All right. Here's a good question. What about a therapist who is paid per appointment? Their past 12 months will be higher than currently what their pay should be, as they won't be executing as many appointments. Do I continue to pay them per appointment, or can I utilize the average past income to keep them steady? That sounds like a 1099 independent contractor situation, doesn't it, guys?
It does. It does, specifically because of the way that's structured. And so the payroll protection can cover 1099 persons as well that you've paid in those situations. So as far as if you're trying to continue to pay them, even though they're not seeing patients, and you want to keep their salary up, yeah, you are eligible for the employer tax credit for those wages that you're paying them up to that 80-hour, keep in mind that rate. But for the payroll protection, it's not really saying that you can't continue to pay them whatever you want. It's up to you as the business owner. But if their performance has gone down and you don't want to continue to pay them for the hours that they're not working or the patients they're not seeing, and you can utilize that extra money that you got and pay the rent or the mortgage or the interest for some other things that you're incurring, as long as they're in that payroll protection deemed necessary expenses to continue.
Okay.
The EIDL loan, the proper name, someone asked this, is the Economic Injury Disaster Loan. Economic Injury Disaster Loan. And that application is available on the SBA.gov website with a $10,000 advance. And then if you don't get accepted for the EIDL loan and you did receive the $10,000 advance on the loan, the SBA will then change the wording to that $10,000 was a grant and not an advance, and they won't try to recollect it from you.
Well, here's a really good question. It's an ethical question. What if your current monthly payroll is less than the average monthly using the last 12 months?
I think that you don't know what your business position is going to be in the next 60 to 75 days. And because you have 8 weeks to use the monies for covered eligible expenses, i.e. rent, utilities, mortgage interest, in addition to payroll and benefits, you still take what you're eligible for and use it to the best of your ability. Or if you know, say your payroll, your payroll is only half now than what it was then. So maybe you only take a portion of that, but still don't sell yourself short, right? Because you're gonna have these other expenses, and some of us, especially in the professional services industry, our clients might not be able to pay in 90 days or in 120 days because they've been adversely affected by this.
So there's a follow-up to that question, but let me go on for this. So last Friday, when we really started to get our hands around this thing, I had those same ethical concerns. What about those businesses that are okay right now, right? And for those of you that subscribe to our newsletter, I sent out we use Constant Contact. I sent out a video from the president of the American Institute of Certified Public Accountants, the AICPA, Barry Melkonon. And this was the guidance, and it really changed my thought process on this. This is not something that we can think about like the 2008 financial crisis, what we're experiencing right now as a country and as a world and as a business community. This is a different thing, everyone. This is a different economy that we're in now and what we're going to be in. This is a real line of demarcation from the past to the future. And the guidance they had for us is when we talk to our clients, we need to tell them that this isn't like a loan to expand your business. The whole reasoning behind this is to keep your balance sheet strong So in 60 or 90 days or 30 days, when we get out of this, even a strong business that had $100,000 in cash is not down to $50,000 in cash. Now we'll look at that business and say, okay, you're doing fine. But we want this business, right, to come out of there with the same amount of cash on their balance sheet. So the whole thought process is some of these businesses have already started to feel the effect in their industry, and they started to feel it in February and early March. And some of us quite haven't felt it yet because maybe we're just doing our month-end billing for March and our receivables aren't even there yet, right? But we're probably looking at the fact that our receivables aren't going to turn around as much, and we might be having to. So the point I'm trying to get across to everyone is this is an opportunity for you to use this money to strengthen your balance sheet and be prepared for the economy to be upshot. What the government doesn't want is for there to be a massacre of small businesses. Look, this is the best bill I've ever seen or ever heard or about for small businesses. I always scream for small businesses. I'm a small business owner, right? We make up 95%, I think, of the workforce in this country. It's a huge number, right? No, we don't work at Apple and General Electric, but small businesses are the wheels that keep the engine going. And so the government said, we need to help all these small businesses, whether it's the pizza shop or the law firm with 100 people that work at it. They're all small businesses. And what they wanted to do was get liquidity to us so we can keep our people employed and make sure that when we do get out of it, and I think we all know that we will get out of it, right? That we're going to be able to go back to work. However different that is, no one knows. But they don't want businesses completely destroyed by that, because what that does is it sets the domino effect going. And what we're trying to avoid is a duplication of what happened when the stock market crashed or in 2008. That was a very long recovery period, right? And so what they're hopeful for is once everyone's out of their house, we're not in somewhat of like a 24-month recovery period. We're recovered by the end of the year. I was on a webinar yesterday, and I will not bore everyone with this, for Duff and Phelps, looking at equity and debt risk rates for valuing private company investments. And one of the questions in there said, do you think the portfolio of valuation investments be higher at the end of the year, on par, or lower than what they were on March 31st? I think everyone was kind of lukewarm, saying we think they're going to be about the same, right? And you're talking about valuation experts and all of those types of things. Some of us, believe it or not, thought that the decrease would be small, but no one here thought it would be like a 50% decrease. So I think everyone in the valuation community, and this isn't just for businesses, but also for investments that sit on private company balance sheets, we're all hopeful and expecting that by the end of the year, asset valuations will be on par, right? Do we think they'll be fully recovered and we'll have gains? I don't think anyone's thinking that yet. You know, I think even with the stock market, I think everyone's still hopeful that, you know, are we going to be at 29,000 in the Dow? Probably not. But can we be at 23, 24, 25? Yeah, I think so, right? So everyone's very hopeful that this is a short-term thing and not a long-term thing. So the money is there. And I'm going to tell you this. If you're not taking it, your competitor is taking it. And they're going to have a stronger balance sheet, okay? So you need to get tough. You need to get creative. You need to realize that the economy has changed. Your business model has changed. And you need to, just like every other small business owner, we all started with nothing, right? I started with one client paying $300 a month and had 2 kids and a wife that was 7.5 months pregnant, right? So we got to get through this, and I think we'll get through this because of ingenuity. Let me go back to one question because we have one time, and this is a good one. With a partnership, we split all bills and then take our cut. Basically, independent contractor. Is the 2.5 times your revenue, your 2 months, the best option to cover lost wages and money for all bills? Also, is it double dipping to apply for unemployment? We are in the fitness industry and the revenue has reduced by 90% as we are a relationship service industry. I think everyone can see that question. Christina, Stephanie?
So
it looks like it's about 3 questions.
yes. Okay. So let's start at the top. So payroll protection is not going to be the option for you, although you would be eligible for your self-employment income at the individual level. So each partner would have to apply for the payroll protection program individually for self-employment income to cover the partnership. I think the better option in that situation would be to take the economic injury and disaster loan. The payback period is 10 years. The max interest rate is 4%. So you lose the forgivable piece, but it will cover any of your operating expenses and what you would be taking out as your distribution. So for this specific scenario, I think that might be a better option for you.
And then in regards to the unemployment, it's really not super clear on whether you're going to be double dipping if you take the loan to pay the bills that you need to pay, and then you still collect the unemployment available to you. So
I think just to add to that, I'm sorry, just remember that your unemployment is going to be subject to income tax, whereas the loan monies will not, and you'll get the interest deduction for the interest paid on those loans.
Right.
So we've unfortunately come to the end of it. I want to let everyone know that these slides are available. Here's our contact information. Feel free to reach out to Joe. And I'm sure Joe can let me know those people that need them. So I unmuted you. I wanted you to be able to talk here at the end. We're fielding calls all day. I'll be honest with you. My firm and everyone at my firm is my partner. They're my team. We feel that this is ethically our responsibility to educate the small business community. So please feel free to reach out to us. We'll do our best, right? Like we are inundated right now with calls and questions. I'll be honest with you, my banker is calling me, asking me questions, which is kind of scary, but I think everyone's learning, right? And we're trying to learn together. If I could say anything to anyone is look at your balance sheet, figure out how you're going to manage your balance sheet. I think a lot of small business owners, they manage their profit and loss, but you don't even realize you're managing your balance sheet because you're probably checking your bank account every day. Think about what your upcoming debt obligations are. Reach out to your landlord. Reach out to your vendors that are supplying you. It's okay to ask for breaks right now, whether that be extending payment terms, whether that be distinguishing it. I think that every agreement right now calls for some sort of a change on that. And don't be afraid to ask for those types of things. If you do have money, pay your bills, right? Let's not set that domino across the effect. That's what these programs are here for. So with that said, Joe, I turn it over to you.
All right, Josh, thank you so much. And that was a lot of information, but very useful information. I'm sure we only skimmed the top of it, you know, and guys, if you're still on the call and gals, if you're still on the call, I know there's probably going to be follow-up questions. Send them to me and we can get them to Josh, and, you know, we will do our best to help continue on. And I would say too, if you have your own CPA, like I see my own CPA, and I wanted this to just kind of be a good guiding course for folks to get the basic questions answered, and then you can reach out to your CPA to actually help you collect all the documents, because there's documents that you have to submit with the PPP form. that your CPA or yourself will have to have. But anyways, just thank you, Josh, very much. We may ask you to do another call as time goes on, only because I'm sure new information will come out. But this has been extremely helpful, and there's a lot of information out there, and we just appreciate someone willing to take a handle on it and say, this is what it is, this is what it isn't, and we really appreciate that. We are going to invite you to another one of our calls, so we'll talk about that later. But anyways,
we appreciate it. Anything that we can do to help everyone. Jacksonville has opened me with open arms. I've been here for 7 years. I love the community. Ocala, these are our homes. We're in it here with everyone. So however we can help, just let us know.
Awesome. Okay. Well, thank you everybody so much. We'll send out information. I have the email list of everyone that was on this call. It was recorded. We'll get that from Josh or whoever later. And you can send all your questions to me, and I'll filter through and sort them out. And I will not answer them myself. I will give them to the expert to answer them. So thank you everybody so much. I appreciate it. And we will talk soon. Have a good day.
Thank you.
Have a good
Bye,
day.
everyone.